Welcome, ladies and gentlemen, to another online episode of the Natural Resource Forum or Symposium. I'm delighted to have an old friend and business associate, I mean that figuratively rather than literally, of course, Rudi Fronk, with whom I have done business. I've been an investor of his for about 2 decades. Rudi, thank you for your ongoing support of both our online and live activities.
Well, Rick, always great to meet with you, whether live or on the camera. But thank you for your support over the years as well.
It's been a real pleasure. Now, ladies and gentlemen, Rudi has become attracted, I guess, over 3 decades to what many of us in the business call the optionality trade, which is to say to buy primarily gold assets when they are deeply out of favor, assets that wouldn't make any money at $250 or $300 gold, in the belief that gold will ultimately, over time, go up. Rudi has worked 3 decades now to be an overnight success, commanding this gigantic market capitalization that he does. And we're going to explore how he did it, why he did it, and what that may portend for his shareholders in the future. So, Rudi, if you could, first of all, give us an overview of Seabridge. Tell us about the assets. Tell us things like how many gold ounces per share you have, and how it is that you're prepared for what we both believe is the next bull market.
Happy to do so, Rick. So my colleagues and I took over Seabridge Gold as a shell company back in 1999 with a contrarian view that the price of gold would go higher. Back then, gold was trading at about $260 an ounce. It was a time when the major mining companies were selling out core assets to raise cash because they were desperate for survival. We went in at that time and over a 3-year period acquired a number of assets, which gave us an initial stake of ounces in the ground that were not economic. Those projects we acquired, we also believe that upside exploration, which has been borne out in spades now over the past 23 years. If you look at Seabridge today, we have over 170 million ounces of gold resources in the ground in all resource categories. We have about 80 million shares outstanding, meaning that each one of our shares is backed by just over 2 ounces of gold per common share. That's 5 to 50 times more gold ownership than any company out there. And the other important feature is, it's not just about ounces in the ground. These are also quality ounces that at today's gold prices will show tremendous economics.
You know, I remember, Rudi, you and I visiting probably 1999 or 2000, commenting ruefully on the idea that if you acquired a gold asset when prices were low and rushed it into production, what you had after the gold price went up is a great big hole where your gold used to be. Uh, that always seems strange. You know, in the mining business, we do odd things. We take gold from a nice safe hole in the ground called a deposit, and we put it in a different hole in the ground called a vault, sometimes making more, sometimes making less. So take us back through your decision not to destroy, but rather to beneficiate your ounces. First of all, when you first bought that deposit in northern BC, Kerr Sulphurettes, I guess it was called then, tell us how many ounces that you bought and what price you paid per ounce. And then tell us how you took what was a decent sized deposit and made it into a super giant.
Okay. Well, yeah, that's a great story. So KSM is a project that we acquired from Placer Dome in June of 2000. Placer Dome had spent about $25 million at KSM up to that point in time, delineating 2 deposits, the Kerr deposit and the Sulphurettes deposit, which collectively they reported about 3.4 million ounces of gold and 2.7 billion pounds of copper in resources. Based on the gold price back then and the copper price, they were willing to sell this for pennies on the dollar. In fact, we came in and bought this asset at that time for $200,000. So less than 10 cents an ounce in the ground when you actually do the math on it. So quite remarkable that we were able to buy something that had so much dollars spent on it for such a low value. But the amazing thing is, I think when we looked at the project back then, we saw exploration upside. Never in our wildest dreams, though, did we believe or see that it could become the largest undeveloped gold and copper project in the world today, as measured either by gold reserves or gold resources. We got very fortunate. There was exploration upside, but We've now added two deposits on our own, the Mitchell deposit and the Iron Cap deposit, in addition to the two deposits that Placer Dome had found. And in late 2020, we bought a fifth deposit called Snowfield, which we're now calling East Mitchell, to give us five deposits at KSM with over 150 million ounces of gold and over 50 billion pounds of copper in total resources.
That's amazing. And in terms of now turning those ounces to account, my own personal belief is that we're in the early sort of stages of a gold bull market. Of course, I might be right, I might be wrong. But just for fun, assuming I'm right, what gold price do you think you need to turn that 150 million latent ounces into a very, very large gold mine? And how might you go about doing it? It would seem that that's going to require an enormous amount of capital.
A lot of capital for sure. So we did our most recent pre-feasibility study was in 2016. That at the time we used 1275 gold and I think 275 copper as our metal prices. And at those prices at that time, the project showed an all-in cost of production of about $670 an ounce of gold. And that all-in cost of production included the $5 billion of upfront capital, the sustaining capital over a 50-year mine life, the closure costs, the reclamation costs, and the operating costs net of byproduct credits. So a project that was still going to do just fine, even at a gold price much lower than today. We're now in the process of updating that study to incorporate the Snowfield deposit into the mine plan. That updated pre-feas will be out sometime in June, and we believe we're going to show a much more robust project than the 2016 pre-feasibility study showed in terms of all financial metrics, net present values, internal rates of returns, and a much quicker payback, even in the face of, obviously inflation we're seeing, both in terms of capital costs and operating costs. Obviously, one of the benefits is we'll be able to use higher gold and copper prices than we used back in 2016. We've made it very clear from day one that KSM is a project that's too big for us to even try and do on our own. In fact, when we look at the universe of mining companies, we see perhaps 7 or 8 companies that have the social, technical, and financial wherewithal to take on a project the scale of KSM. And our goal is to complete a joint venture with one of these major mining companies where we keep a meaningful stake in the project through an interest, but try to minimize our capital contribution going forward.
Do you have a rough estimate? Pardon me. Do you have a rough estimate, or would you rather wait for the study in terms of where you see the capital cost today coming in?
Well, the last study was done at about $5 billion US of capital. I think we're probably looking at a 20 to 25% increase over that from the 2016 study. That's just the world we live in. Cement has gone up, steel has gone up, labor has gone up, and all that has to be factored into the updated study, which we're now doing. But offsetting that will be, better metal prices. Historically, we've used a 3-year metal price average for a base case analysis. If you look right now on a 3-year look back in gold and copper, I think you'd have gold at about $17.28 an ounce and copper at about $3.50 a pound. We'll probably even look at the project at much lower metal prices than that as well.
And to refresh our listeners' memory, the last economic assessment that you did used $1,250 as opposed to $1,700 gold, which obviously makes an enormous difference amortized over 150 million ounces of gold.
Agreed. Although our mine plan, even though we have 11 billion tons of economic resources, we're only permitted now for 2.3 or 2.4 billion tons of tailings. So our mine plan will only capture 2.3 or 2.4 billion tons of our 11 billion tons of resources. But even on that, that's going to give us a mine life well more than 3 decades.
Probably plenty for you and I. Tell us something about the recent transactions that you've done to begin to beneficiate this deposit while minimizing dilution for your shareholders.
Yeah, well, one of the, I think, advantages that KSM has over any other large undeveloped project around the world today in the gold space and even the copper space is we have successfully gone through the environmental approval process in British Columbia and Canada and have our construction and operating permits already in hand. With those permits would expire, however, in July of 2026. There is a mechanism in British Columbia that if we can achieve what's known as substantially started, meaning we've actually started to get site access through road construction, camp construction, fish compensation areas, though those permits then are good in perpetuity. So about a year ago, we decided to go ahead with the substantial start activities to make sure that our permits don't expire. Now, to fund that is a different story. We're probably looking at upwards of $300 million Canadian to achieve substantial start. We looked at the possibility of going out and doing an equity deal. It would have been about 17 or 18% dilution at the time when we looked at it, which would have been pretty big dilution, but our shareholders probably would have stomached that just to advance the project and make sure the permits don't expire. Instead, we did something quite creative. Rick, as you know, with your old shop, Sprott, they came to us wanting to transact with us, and we structured a deal where we actually sold them a note for US $225 million in cash. And that note automatically converts into a silver royalty at commercial production at KSM. So there was no equity dilution on the front end. We raised the money we needed for substantial start. And at some point in time, Sprott will be holding a royalty on 60% of the gold. Sounds like a lot, but when you look at the gold versus the copper and the silver versus the copper and the gold, you'll see that silver represents less than 3% of the project's revenues. So 60% of 3% is below 2% of the project's future revenues that we're giving up versus 18% share dilution had we done a more traditional raise.
Oh, the beauty of those streams is that focused investment products around one commodity generate much, much, much lower cost of capital. So you're to be congratulated for giving up less than 2% of giving up less than 2% of the revenue to fund what would otherwise have been 18% dilution. My memory is that your project is located mostly within the traditional territory of the Tahltan First Nation, who has substantial experience in mining and have become good friends of mine. Perhaps you could talk something about community and social license and the relationship that you have with the Tahltan peoples.
That's obviously a very critical element in getting any project moving forward, either through the approval process or operations. You know, companies talk about earning their social license. The fact is, you never earn it. You need to continue to improve on it year in and year out. We had our first encounters with the Tahltan Nation and the Niska Nation back in 2008 as we were introducing the project to the local communities. Since that time, we've worked very closely with both organizations. In fact, we have impact benefit agreements in place with both the Tahltan Nation and the Niska Nation. We meet with them on a monthly basis. And right now, with the substantial start activities we're doing, most of the contracts we're letting out are the direct awards to the Tahltan or the Niska, or to companies that have joint ventures with the Tahltan and the Niska. So yes, we're in their territory, but we're working together as partners to move the project forward. You know, from the perspective of the First Nations we're dealing with, I think we can all look at mining projects around the world that, you know, go in, you have a 10 or 15-year life, maybe a 20-year life, and then you walk away and all the economic stimulus evaporates. I think what the Tahltan and the Niska see at KSM is this is a project that can go on for over 100 years based on what we know now in terms of our resources we have in the ground. That's multi-generational. That's going to drive a lot of revenues over a long time and a lot of jobs for the people that are living there now, plus future generations.
Given that our audience is international, there will likely be people from 30 or so countries listening to this interview. Tell them something about the existing mining activities on the Nisga'a and Tahltan territory to give them some sense of the fact that your partners are partners in the truest sense of the word and are already experienced with regards to mining regulation and mining operations.
Yeah. Well, probably the largest mine before we got involved at KSM was the old SK Creek mine that eventually was run by Barrick and Homestake before that. A mine that had been in production for 20 or 30 years, but a mine that also engaged quite closely with the Tahltan Nation as it was on their territory. That then continued on into our involvement, and then more recently with Pretium and their Brucejack project. They were also involved closely with the Tahltan, having agreements in place with them and workers at their site. You also have other companies right now in the arena. You have Skeena Resources, you have SK Mining, all of which are on Tahltan and Niska ground, and also they're working closely. You know, the companies that these First Nations have set up are geared towards construction and running camps and mining operations. The Red Chris mine is another example of a project that's on the Tahltan territory. That's a joint venture between Newcrest and Imperial Metals that also have very strong engagement with the Tahltan Nation. I mean, our hope is that we can hire as many people from the local indigenous groups as possible versus having to bring workers in from outside the region. So that really is something that's important to us. And to that end, we've been involved in training in these local communities for a number of years now, providing scholarships and other training for education for future opportunities that will come about at the projects.
Well, I've seen with my own eyes the efficiency of indigenous labor in northern BC, both at Red Chris and also at Bruce Jack. And I'm delighted that you are able to work with what is in effect a local regulator that's also a partner. To me, that's the best type of intelligent regulation and the best type of synergy. So congratulations on a 20-year effort beginning to bear fruit. I'd like to change topics now. One of the things that's always interested me about Seabridge, and one of the things that's always given me some comfort as a shareholder, has been what I like to call adult supervision. First of all, you have been able to operate this company for many years with minimal share dilution, and you've also been able to attract what I think is one of the most sophisticated private shareholders in the business. If you could talk about adult supervision, if you could talk about the G part of ESG, and how your metric is resource and reserves per share, and also talk about the enforcer in the background, this great shareholder who has supported you all this time.
Yeah, so a great question. I shudder to think where we would be without the support of Albert Friedberg over the past 20 plus years. So early on in Seabridge's life, Albert Friedberg actually approached us because he had heard that what we were doing, which is exactly what he wanted to do, but he didn't have the technical, capabilities to really assess opportunities in the mining space. So he came to us early on as a shareholder. Albert was bullish on gold back then and could be more bullish today going forward with where we stand now in the global financial markets. But Albert liked what we were up to. We focused with him and throughout the past 24 years now on the idea of growing ounces in the ground faster than shares outstanding. That resonated quite well with him. And since that time, Albert has been supporting us as we needed capital over the years. He's supported us in the market and our private placements and our public financings and continues to do so today. Albert runs a organization called the Friedberg Mercantile Group that manages currency and commodity funds for high net worth individuals and has done remarkably well on that over the years. But his ownership in Seabridge is all personal. He owns them. And we hope to make him a lot more money over the years from what he's already gained in terms of upside on our share price.
Wonderful. Finally, although you have grown this deposit from 3 million ounces to 150 million ounces, there's a truism in mining that the best place to look for gold is around a gold mine. Tell us something about upgrading the deposit, both in terms of tenor and in terms of size. Tell us where we go from here, other than an increase in the gold price.
Well, I think the updated pre-feasibility study will show our best and most economic mine plan to date. It's going to be concentrating on the open pits at Mitchell, East Mitchell, and Sulphurettes. All of our mine plans up to this point in time had some block cave mining that was initiated in the first 10 years of operation. We're now simplifying the mine plan with open pit onlys, but also leaving the optionality to the underground block cave mines that have much higher copper content relative to gold. We already know there's 2 or 3 other probably porphyries there that we've actually tagged in the past. But again, when you have 11 billion tons, adding more tons beyond that doesn't do much to the needle. I mean, our focus now is to get a partner in to build this mine. I think our time has now come. Our industry is hell bent on turning gold into cash, and in the context, I think destroying the best form of money that's ever existed into something that can be manipulated and mass produced by a government at will. Our goal will be at KSM is to turn cash into gold. Any joint venture that we do at KSM, we will look to take our share of profits in the form of physical gold and then find a way to dividend out that gold to our shareholders. Investors invest in gold stocks with upside and connectivity to gold. They tend not to get that with the majors because it all's turned to cash. We'd like to continue on our idea of providing optionality and leverage to the gold price by how we operate the projects going forward through a joint venture.
Rudi, thank you for 2 decades of hard work on behalf of your shareholders. Thank you, too, for 2 decades of support for the Natural Resources Investment Symposium, both online and in person. Thank you again.
Rick, always a pleasure, and I look forward to your conference in July.